Today, Bitcoin trades below the $80,000 level as rising trade tensions keep the pressure on global markets. The SEC clarifies that most stablecoins are not securities, and Cleve Mesidor of the Blockchain Foundation shares her thoughts on the stablecoin bills circulating on Capitol Hill. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices in the red to kick off the week. Bitcoin broke below the $80,000 level over the weekend, and the move comes as rattled investors brace for further carnage on Wall Street after President Trump's tariffs raised global recession fears. As of noon Eastern, Bitcoin fell 5% to the $78,000 level, and that's after dropping to the $74,000 level earlier in the morning, its lowest level since November 6th, the day after the 2024 election. Ether plummeted more than 11.5% to just above $1,500, and XRP sank more than 9.5% as investors started dumping their crypto holdings over the weekend. Crypto-focused stocks also in the red as of noon, with the exception of CleanSpark. The Bitcoin miner earned the 35th spot on the America's fastest growing companies in 2025 list, the annual ranking conducted by the Financial Times and statistics portal Statista. Strategy fared the worst as of noon, dropping by nearly 10% after the company said in a filing it expects a $6 billion unrealized loss on its Bitcoin holdings in the first quarter. All of this as investors brace for more volatility after equities suffered their worst decline since 2020. For most of this year, Bitcoin traded above the $80,000 mark, and last week the cryptocurrency remained relatively stable, bucking the broader market meltdown. In fact, we told you that Bitcoin actually rose to end the week as stocks tumbled and even gold fell. Speaking on CNBC's Squawk Box this morning, acting SEC Chairman Mark Uyeda discussed the fallout from the president's sweeping new tariffs and was asked about crypto and how correlated the asset class is to the broader market.
Well, I think that's been one of the biggest questions over the last, I would say, decade or so, is the increase in correlation between asset classes. And there was a time where you would have a definite different results between fixed income and equity. We've seen a convergence of the results there. That's been one of the big questions with respect to crypto. Is this a new asset class that will have uncorrelated returns, or at least a greater amount of uncorrelation that you see in the public markets right now?
All right, let's talk about the top stories. The SEC clarified that most stablecoins are not securities. The agency issued a statement on Friday specifying that the SEC's Division of Corporate Finance considers these non-security stablecoins to be, quote, designed to maintain a stable value relative to the United States dollar, or USD, on a one-for-one basis and can be redeemed for USD on a one-to-one basis. It also says they must be, quote, backed by assets held in a reserve that are considered low risk and readily liquid with a USD value that meets or exceeds the redemption value of the stablecoins in circulation. The SEC's definition of a covered stablecoin does not allow for interest payments by the issuer to the user. That's a topic Coinbase CEO Brian Armstrong is hoping Congress will change. Last week, he spoke to CNBC, arguing that stablecoins should be able to pay interest to consumers and that banks and crypto companies should be able to do the same. The clarification from the SEC comes as the stablecoin sector has been growing increasingly optimistic that Congress will pass its first piece of crypto legislation this year, focused on stablecoins, as two pieces of stablecoin legislation are now waiting for a full vote. Next, Hong Kong's securities regulator laid out new guidance today that would let licensed crypto exchanges and funds with exposure to digital assets offer staking services. The Securities and Futures Commission, or SFC, said the agency, quote, recognizes the potential benefits of staking in enhancing the security of blockchain networks and allowing investors to earn yields on digital assets within a regulated market environment. The SFC mandates that platforms disclose all risks tied to staking and safeguard the staked crypto assets of clients. Staking is a way for investors to earn passive yield on their crypto holdings by locking tokens up on the network for a period of time. Here in the US, back in January, Kraken brought back crypto staking in a few US states after ending its staking as a service platform for US customers in February 2023. That was during Gary Gensler's chairmanship over the SEC. And last month, the New York Stock Exchange proposed allowing staking in Bitwise's Ethereum ETF. The Securities and Exchange Commission has historically viewed some staking services as potential unregistered securities. However, a more crypto-friendly SEC has been moving quickly to change course. So far, no official word on the agency's current stance on staking. All right, back to regulation for our main story. Last week, Crypto World's Tanea McKeel sat down with Cleve Mesidor, the executive director of the crypto advocacy group, the Blockchain Foundation. As a self-identified lifelong Democrat, she weighs in on the evolution of the party's crypto stance. She also shared her thoughts on the stablecoin bills being debated in Congress and what she would like to see related to market structure legislation.
You have been very supportive of many Democratic candidates in the 2024 election. In fact, you helped pen a letter to then candidate Kamala Harris, urging her to discuss policy, not to mention your support of Democratic candidates running in congressional races. So through that lens, how are you feeling about sort of the evolution of the party on crypto issues?
Well, I was very frustrated during the Biden administration that we couldn't get more Democrats in support of crypto. Congressman Wiley Nickel, who just left Congress, I just recently had a conversation with him. He spent a lot of time last Congress educating congressional members, getting them on board. And I think we made a lot of headway last Congress. This year is just April. We've seen a few bills pass on a bipartisan basis. But I'm very frustrated that it looks like some Democrats are going to use crypto as a pawn against the administration. I get that, there's a need to push back on the Trump administration, but using crypto as a sword is not the pathway, especially since the earliest and largest adapters are working class, communities of color, young people. And those are the people who are the casualties of war when Democrats use, crypto as a sword.
Of course, many people have been very happy to see different examples of bipartisanship on crypto issues. And the stablecoin legislation that we've been debating this year is sort of a prime example of that. We had the markup of the Stable Act yesterday before it passed committee. We have the competing Genius Act over in the Senate waiting on a full vote. Do you feel like these bills are moving in the right direction?
Well, I think they're being debated, right? Almost 14 hours of debate on the House bill yesterday. That was needed, right? And that was necessary. I will caution, Ranking Member Waters and others to not make this about Trump, to make it about the ecosystem. Mm-hmm. It is founders, it is startups, it is small businesses, it is creators that have created this industry, and they're looking for members of Congress to advance stablecoin legislation, market structure legislation from that lens. I would have preferred yesterday to see Democrats propose amendments to actually focus on ensuring smaller operators can become issuers, right? Looking at ways where we can support entrepreneurs, because we know at the state level, there are a lot of entrepreneurs that have created stablecoin companies. Even when you look at the stablecoin bill that was marked up yesterday, there's a provision to ensure that credit union subsidiaries can actually issue stablecoins. I would love to see Democrats focus on community banks, minority banks becoming issuers, creating a pathway. That's what Democrats out there are looking for Democrats to lead on, not just to be obstructionists just because they're looking for a wedge.
What about on market structure? When you're thinking about developing consumer protections, what are you hoping for, and what do you want to see Congress do there?
Well, I'm excited about market structure. We've needed the rules of the road for a long time. I'm one of those big critics of traditional consumer protection policies because Democrats have approached it from a patriarchy perspective. I think we need risk mitigation for all, not just consumer protection that holds back, people of color, people who have been locked out of the traditional financial system. We need risk mitigation that says, how do we increase access by providing resources for financial education, by making sure that these digital products have financial education built in, have tools, early warning tools that people can actually use to protect themselves. Risk mitigation is something that we absolutely need. We need guardrails, but we don't need to use the patriarchy approach to consumer protection. On market structure, I'm really looking at this whole decentralization test because I want to make sure that it doesn't create an industry where only the largest players can succeed. We saw that with the bit license in New York State, where only the wealthiest companies can get a license. That shouldn't be the case. I argue that for market structure, we need a tiered approach to compliance, to disclosure measures, right? Let's look at what are the small entities, right, that can get, licenses when we look at disclosure. It shouldn't just be the large companies, because if some crypto companies that are medium-sized or small cannot get a license under market structure, then we're not creating a pathway for traditional small businesses to enter this space. So I think these are the conversations that will make a richer debate, and that's where we should be, those should be the sticking points that Democrats and Republicans focus on.
So, like I said at the top, you've been very supportive, and it sounds like very engaged with the party. Are you engaging with lawmakers at all on these issues, and how so?
Yes, as you shared, I am a lifelong Democrat. I served in the Obama administration. I worked in Congress for Barbara Lee and Betty McCollum. But I will say that in the 8 years that I've been working in crypto, focus on access, focus on inclusions, focusing on advocating for entrepreneurs and small businesses, I've received just as much support from Republican members and Republican staffers. So I will say on these issues, they are bipartisan issues, because I think both parties want this industry to be, supported by small businesses to actually move forward. Now, I will say, I think we have a lot of work to do. The American people are looking to Washington to make the right decisions on a lot of issues. On crypto, the folks I represent in crypto, the folks I advocate for, are looking for Democrats as well as Republicans to understand that the future of money and the future of finance includes digital assets. And how can we make sure that credit unions, minority banks, small businesses, entrepreneurs, creators are central to the conversations around market structure, around legislation. So for me, I'll continue to advocate for these issues. It doesn't matter who's in the White House or who controls both chambers of Congress. These issues still must advance.
All right, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.